The financial system as we know it is flashing red alerts, and today we're diving deep into what I believe is the start of a major liquidity crisis, with silver at the epicenter. We're seeing unprecedented moves in the market, things that haven't happened in decades, and it's crucial you understand what's going on. Just recently, we witnessed a staggering event. Silver didn't just climb, it exploded. We're talking about a potential spike to the $79 to $80 range. Now, you might be looking at the official charts and seeing something completely different, maybe around $30. That's the whole point. There's a massive disconnect between the paper price and the physical reality, and that's where the crisis begins. This isn't just about a commodity price going up. This is about the system itself breaking down. We're seeing signs that the paper market, the one based on contracts and derivatives, is losing its grip on reality. The demand for physical silver, the actual metal you can hold in your hand, is so intense that the official price is becoming irrelevant. What does this mean? It means a liquidity crisis has begun. When people rush to get their hands on a real asset, and there isn't enough to go around at the price being quoted, the system freezes. Think of it like a bank run, but for precious metals. Everyone wants to redeem their paper claims for the real thing, but the vaults are running low. We've been talking about this possibility for years, the potential for a day when the paper market would decouple from the physical market. Well, that day might be here. The signs are everywhere. Major dealers are reporting massive shortages. Premiums on silver coins and bars are skyrocketing. People are paying far more than the so-called spot price just to get their hands on the metal. Why is this happening now? A perfect storm of factors is brewing. We have persistent inflation that's eroding the value of our savings. We have geopolitical instability around the globe, making investors nervous. And we have a mountain of debt that's becoming harder and harder to manage as interest rates have risen. In this environment, people are flocking to assets that have been a store of value for thousands of years, like silver and gold. Silver, in particular, has a unique role. It's not just a monetary metal, it's also a critical industrial metal. It's used in everything from solar panels to electric vehicles to electronics. This dual demand puts an incredible squeeze on the available supply. While investment demand is soaring, industrial demand continues to grow, leaving very little metal left over. The numbers we're seeing, this $79 to $80 silver, aren't just fantasy. They reflect the true price discovery that happens when supply and demand meet in the real world, away from the manipulated paper markets. This is what happens when the dam breaks. The COMEX and other exchanges can try to control the price with paper contracts, but they can't print physical silver. This liquidity crisis isn't just a problem for silver investors. It's a signal for the entire financial system. It shows a loss of confidence. When people no longer trust the paper assets they're holding, they rush for the exits. This can spread from one market to another, creating a domino effect. We could see this pressure move into the bond market, the stock market, and even the currency markets. What we are witnessing is the physical market telling the paper market, we don't believe you anymore. The price you're quoting is not real. The real price is what someone is willing to pay to get actual physical delivery. And right now, that price is going through the roof. So what can you do? First and foremost, get educated. Understand the difference between owning physical metal and owning a paper claim like an ETF. And while ETFs can be convenient, they carry counterparty risk. In a true crisis, the question becomes, can you actually get your metal? History has shown that when things get tough, the rules can change. Consider the role of tangible assets in your own portfolio. For centuries, physical gold and silver have served as a form of financial insurance. They don't have counterparty risk. You hold it, you own it. It's a way to protect your purchasing power outside of the traditional banking and financial system. The events we're seeing are a wake-up call. The system's fragility is being exposed. The surge in the true physical price of silver is like the canary in the coal mine, signaling danger ahead for the broader economy. It's not about trying to time the market or get rich quick. It's about understanding the fundamental shifts that are happening and preparing for a future that might look very different from the past. The illusion of endless paper money and manipulated markets is beginning to crumble. The reality of finite physical assets is taking center stage. The price action in silver is just the first major tremor. Pay close attention to what's happening, because it's a preview of what could be coming for other assets. The demand for real things is back, and it's changing the game entirely. This isn't fear-mongering. It's about being aware of the risks and the signs the market is giving us. The disconnect between paper and physical is a crack in the foundation of our financial system. The spike to $80 silver isn't the end of the story. It's the beginning of a new chapter where real value reasserts itself. Keep your eyes open, stay informed, and think about how to position yourself for the changes ahead. Thanks for watching, and be sure to follow for more updates as this story develops.